From China's perspective, it is likely concluded. They're adamant about keeping everything for themselves. What piques our attention, though, is that I believe the same degree of stringency applies to silver as it does to rare earths. We are aware that it includes gold. As far as gold is concerned, China is like Hotel California. I keep bringing it up. A lot of people go in, but they never come out. I believe, however, that this is no longer the case with silver. It seems unlikely that we will be receiving any supplies. Needless to say, demand for ETFs is skyrocketing, chatting to different types of people. Well, I had to deal with the cancellation of one podcast this week due to their overwhelming workload. Seriously, this bullion trader is inundated with orders to purchase gold and silver. Australia is the only country where that is the case. From my contacts in the United States and the United Kingdom, as well as those in Switzerland, I have heard the same thing. All of a sudden, it seems like everyone is buying. In other words, the retail market is starting to purchase coins and little bars, and they're all sold out. In light of everything that has happened, do you still believe that silver's price will recover? The idea that China will suddenly offer assistance is laughable. We'll give you some inventory. Silver has experienced significant backwardations, and leasing rates have soared. Actually, I read elsewhere that it was 90%. Truly, this is at an all-time low. Everyone is in a state of despair. Desperation is evident in the shorts. They also borrow ETF shares, sell them to get the underlying metal, and then deliver it, if you wish, in compliance with their responsibilities. This is another thing they do that keeps the price up. However, the issue arises when they find themselves short and are forced to reverse the deal. Therefore, they still haven't gotten themselves straightened up. They've essentially created something similar to a payday loan. They only managed to save themselves for a few days. I mean it. Well, this is... Seriously, I've heard from seasoned hands that they've never encountered anything like this. No, not even the hunt for the bunker counts. 40 years ago, it was far more challenging. To clarify, the bunker hunts were resolved through a combination of regulation changes implemented by the COMEX. They were also supposed to receive arrow backing, in my opinion. The guarantee of arrow backing was made. Because the Arabs were convinced not to participate, their plan to dominate the silver market collapsed. However, in this case, no one is attempting to do it alone. At last, the market has come to the realization that silver is incredibly cheap. As I sit here in front of my computer, I can see that the gold-to-silver ratio is 79.98. You know what I mean? Silver is being overpriced since its correct value should be between 20 and 30. The obvious cause of it is the recent spike in the price of gold. It has really highlighted how inexpensive it is. Naturally, those who sold gold before won't shell out $4,000 today. They'll purchase silver as they perceive it as an inexpensive entry point. A low-cost entry point. Indeed, it is really logical, but they lack the difficulty with selling gold at $2,500 and then trying to repurchase it at $4,000, $4,100, $4,200, or any other price is that it's considerably easier to justify buying silver instead of gold. They are engaged in the activity. Another thing to keep in mind is that actual gold only accounts for a fraction of worldwide portfolios. Goldman Sachs, Bank of America, and everyone else is still involved. Gold is currently being recommended by their strategists. I believe Morgan Stanley even went so far as to recommend holding 20% of your assets in gold. To be fair, I assume they are referring to investments in gold. What do the portfolio managers have anyway? Take a look at these banks. They're each managing more than $1 trillion. How can incompetent investment managers make a living? None of this has arrived at their hands just yet. A high-ranking official at headquarters has told you to buy gold. His extremely wealthy clients, who have at least $100 million between them, accuse him of suggesting they invest in gold while he himself has none, and wonders why he wasn't treated to some. As you can see, we've entered the domain of peer pressure. One of my Substack followers kindly forwarded me a letter from one of our articles quoting experts stating, "Oh, this run is getting mature and it's getting very volatile, and it's generally a sign of a top. So I guess you could say this won't end anytime soon." Seriously though, To put it simply, they are completely confused. They fail to grasp its complexities. This is why it's so interesting. Honestly, a price hike usually fixes these issues. However, supply becomes increasingly scarce as demand outstrips supply as prices rise. So, there's probably a word for it. When prices go up, supply goes down and demand goes up even more. In my opinion, it's pretty good. That is the situation we are in. It's great to see that more and more people are talking about how gold can protect you from the credit collapse. It makes me happy because people are starting to understand the importance of protecting themselves, but I can't speak for you, Daryl. What intrigues me, though, is that I believe this is only the beginning. I mean it. Just keep in mind early on in its embrace of capitalism and markets, the United States was China's primary export market. I mean, they had a huge trade surplus with the United States, especially because many American companies established factories in China. Thus, this company is American, and it has just moved to China. Over time, that has decreased. That drop really sped up when President Trump became office. Moreover, the United States is now responsible for fewer than 10% of China's exports, a significant decline from its previous dominance. Plus, it has not yet recovered. If you're interested, that's the background. President Trump has been somewhat arbitrary with his tariff threats, and he has threatened both this and that duty. No kind of certainty can be expressed. An individual who is always shifting his position is impossible to work with. In other words, President Xi no longer cares as far as he is concerned. Honestly, why bother? It was becoming very evident that the United States was simply not cooperating with anything. And in the incredibly critical race for technology, China said, okay, we need to prevent our competitors from having rare earths if we want to win this race. Consequently, declares export limits on rare earths. On the tariff side, I'm going to add another 100%, Trump continues, completely losing it. Xi Jinping departs. Seriously, the markets, when Trump took on, oh my goodness, what are the tickets out? I swear, this term has to be in the dictionary. What was China's action? Thank thing they said what Trump wanted them to say. At least now he's being reasonable and pragmatic, and we can start negotiating. What on earth is going on? It only stated that, under no circumstances, in no world. The West and the United States in particular will continue to be severely undersupplied with rare earth elements regardless of how much you beg them to change their policies. On top of that, I believe we can enhance it with silver. No one seems to be discussing this. However, for quite some time, China has been the dominant player in the silver market. Clearly, they have determined they no longer have any say over it, for the simple reason that maintaining price control forces China to sell silver to meet market demand. Additionally, it has been known for at least 5 or 6 years that there is a silver supply shortage. How was it met? As far as the Silver Institute is concerned, it is derived from silver investments and so on. Oh, is that so? In my opinion, you'll see that it has been on the periphery all along. China supplied it. They are no longer participating in the market. So now they're making a living by lowering the price of silver in Western markets. They intend to keep their silver, at least in their eyes. Sure, let's just hang around instead. Well, it has rare earth elements which the United States needs badly but will not be able to obtain. You can put it that way. It is, in fact. China would likely respond with something along the lines of, well, yeah, we might sort of help a little bit. But after getting bit once, they wouldn't want to be bitten again, even if Trump decided to scrap tariffs entirely. As an example of a schoolyard bully, you can go no further than Modi of India, whom Trump attempted to intimidate. Concerns the refining of oil from Russia. Right, he claimed that India would be subject to 50% tariffs. So what exactly did Modi do? He claimed he simply did not want to respond. Modi reportedly did not answer the phone when Trump called him 4 times. The following week, he attended the Shanghai Cooperation Organization meeting in Beijing, or China. It was one of numerous cities in China. It was not Beijing, the kind of thing where Xi and Putin embrace and kiss each other. In other words, India has made it quite plain where they believe their interests lie. Even though India sends a lot of goods to the US, they refuse to be intimidated, not to mention Xi. The fact that they aim to eliminate the dollar should also be considered. Should we expect them to engage in more trade? If they want to increase trade, they will need more money. No, that is completely not what they want. The most recent development, which adds an intriguing spin to the story, is that Chinese investors have been purchasing British gilts. These bonds are issued by the government. For what reason, we wonder? The short answer is that they have no interest in purchasing US bonds. For some reason, they'd rather trade their bucks for something else. Gold is completely gone. There is no more gold for them. Their job description, then? I mean, they'll buy trash if you ask me. Compared to US treasuries, British bonds are worthless garbage. I don't know what else to say except that this circumstance is just incredible. I also believe that the Chinese are likely to continue supporting the European Union by purchasing oats from France, German bonds, or whatever else they can get their hands on. Given that Italy is doing a commendable job of reviving its economy and lowering its debt to GDP ratio, I believe that the only one that makes any real sense for them to purchase is the Italian debt. It has dropped significantly, Although it is still 145%, it is lower than 160, 170. So, while the rest of Europe is in utter disarray, they are enacting rather respectable economic measures. Next to me.